So trend line down here, yes or no, guys?
No.
Mohammed asks me, do we have to draw every supply and demand, like really choppy area, or we can ignore it and draw the major ones? Good question. So I've talked about this before in previous classes, where I said there are times where when price is consolidating, you'll get very choppy, ugly looking charts where the bodies of the candles will be like 50% or just a little bit larger, but you'll have very extended wicks to the top side and very extended wicks on the bottom side. And you'll get a lot of stair-stepping action candles. When you have that type of structure, I wouldn't be so focused on trying to locate every single break of a supply and demand zone, because I used to do that, and I realized that it's not important to do that. Okay, because if you're looking at every single candle close and you're like, okay, that's a momentum candle out of that stair-stepping basing, and then it's stair steps to the downside, but the wicks don't cut through the previous 50%. If you're looking into real detail when price is making those type of formation of candles, you're just going to be making a mess of the analysis, and it's not important. What's important during those times is to locate every single a trend line that's absolutely obvious. It has to be absolutely obvious. And then those zones that remove those trend lines, that is the important thing, okay? So no trend line down there. Why? Well, because drop, this is a long candle, okay? But we can expect these type of long wicks after a big drop, okay? We can't expect that. So it's all putting things into context. After big drops, especially when price was going in one direction, and then all of a sudden it breaks and starts going more in the other direction. Remember, this is like basing, you know, basing, and then it builds, and then all of a sudden it drops through this area. So it's reversing momentum to the opposing side. And when that happens, you'll get these candles, okay? And then some kind of news event came in here and created this candle. So it was a drop, rally, stair steppers down. I would not draw a trend line down there. Mohammed, maybe then we can go to weekly and correct the trend line and supply and demand. We can go to the weekly. Not quite sure, Mohammed. Do you have a mic? Can we chat? If we have a mic, you could chat. Yeah, okay, let me bring you on. How's it going, Mohammed? You there,
Hi.
sir? Hey, how are
Yes.
you?
Hi. I'm good. How are you?
I'm good, thank you.
Wanted to tell you about that choppy array you were talking about. Like, okay,
Mm-hmm.
we can ignore that part. But again,
Mm-hmm.
if this choppy area is on daily or 4 hours, then obviously we can go to a weekly ones, and we can see the clear trend over there, or supply and
Yes.
demand.
Yes,
That's what I wanted to know.
exactly.
Yeah.
Yeah,
Yeah.
yeah. Yeah, because when price enters consolidation like that, okay, so think about it, right? You're looking at a weekly chart, and price is rallying up on a weekly chart, and then it stops. Okay, this is what's going on with the euro right now. This is what's going on with the pound. This is what's going on with the dollar. Okay, it rallies, it creates a big explosive move, it rallies, and then it stops. Momentum shuts down. So that's the institutions that are not buying anymore. Okay, so when it's going through that phase, think about it. Okay, remember, one thing that's so important to remember is that the institutions, when they create price action on a chart, price action looks clean. Candles look clean. The way that the momentum moves out of basing is clean. Very well, properly structured, very uniformed. When it starts to look messy, choppy, candles don't look correct, that's not the institutions doing that. All right. So remember the concept of what happens when there's buying. Okay. So let's just go through that together. So when you have an area where the institutions are buying, it looks like this. Okay. That's what happens. They accumulate a position. This is the highest they're willing to pay, and this is the lowest they're willing to pay. When they're done accumulating that position, they shoot price up like this. So when you look at that price action on a lower time frame, it's going to look proper. The candles are going to look proper. The structure is going to look proper. You're just going to know. After you put in enough time doing chart work and homework, you're going to know. Your brain's going to know this is properly formed candles, okay? So you get that because they're controlling the movements up, they're controlling the movements down, they're controlling all of this, okay? When price breaks up with momentum, that's because they've accumulated the majority of the positions that they wanted to accumulate down at the lows. So when they pop it up, they have plans to pop it up to this area, okay? And let's say it's a supply zone, which this happens all the time. Price comes up to a supply zone. Now, when they get up here, they could be filling supply. It all depends. It's not always the same thing. You have to put things into context, but it's not always the same thing. But what will typically happen is they stop buying up here. Now, we have to remember who's buying at these highs. Okay, this is when retail traders come in. They come in at the worst times because down here they had no clue that price was going to do this. They had no idea. Okay, now there could be a trend line on a higher time frame, and they could be, you know, it could be one of those lucky pulls of the slot machine where they actually get paid and they're in this position, but they don't realize that price is going to stop here. Okay, so it stops there. And so as it's going up, retail traders are buying last minute. Now the institutions, they stop buying. When the institutions stop buying, unless there's a major event in the news that's making all retail traders buy, price is not going to go up. It's just not going to. And so when you have this same structure, okay, of ups and downs, this structure up here does not look the same as this structure down here. And the reason being is because down here, the institutions, the banks, they were the ones creating this price action, controlled, preparing for a move, okay? They are the ones creating that. Up here, it's not the banks. I mean, the banks can be involved to a certain degree. Sometimes they'll take profits on some of the long positions that they've been accumulating, you know, as they've been driving price up like this. But they're not, it's not properly formed because it's not the same type of situation as down here. So in this situation up here, what you'll typically see is you'll see long candles, little 50%s like this, long candles, long candles. And then they'll slowly go down, slowly go down, slowly go down, slowly go down. This is what it looks like.
This is exactly like happened to USD CAD, I think, on weekly chart.
Yeah, so you'll see stuff like this. It goes up slowly, goes down slowly, and then, you know, trying to locate trend lines and locate zones. In that type of scenario, you don't want to waste your time doing that because I've come to realize it's not important. And again, the logic is if there's any trend lines being broken there, they're not the institutions creating those trend lines, not in those situations. So that's just random trading. That's retail traders saying, "Oops, I think I made a mistake. I might have bought too late." And they're closing positions. Then they're like, "Oh no, it's going up again," so they're adding positions. And then it goes down. And they're like, "Oops, maybe I should get out. Maybe I should go short." And then it goes up. And then, "Oh, maybe I should go long." That's what they're doing. So when they do that, it creates that mess. So in those situations, yeah, don't bother. So this is a good chart. No problem. So this is some decent work. Some zones were missed, but not too bad. Not too bad. Nice trend line to the upside. There was one here too. Because again, if you draw the squares here, they don't cross over the body that were used to propel price higher. So price hit some kind of a supply, started to reverse down, and then back up. Jason's with us. So remember, Jason, how many times we've talked about this? When price is reacting from higher time frame areas. Remember I said if there's a trend in the opposing direction, it would be very weak. Like look at this. Okay. Very weak. And then those areas that were created from the break of a trend line, price starts to head back. And then those are the areas that are used to continue price higher. Same thing over and over again. Right, Jay?
Yeah, go.
Yeah, but isn't that amazing how it's always the same thing?
Always the same thing, yeah.
Always the same thing. It's just if you don't know what to look for, you'll never see it. But once you know what to look for, and you know what context it's taking place in, it's always the same thing. So that's why it's so important to apply those rules and know where those trend lines are, because if you're not drawing those trend lines, you're going to miss those great trading opportunities.
Mm-hmm.
Look at that. That was the first zone. And look by how much they push price. The algorithms say this is the exact top of that supply area. Whatever the number is, 72.01 is the distal line of that exact supply. And the algorithms say take it to 79.02. And that's it. And it's just like that. It takes it to 79.02 or 03 or 04, and it says, okay, mission complete. The obstacle, the supply that was the obstacle preventing us from taking price higher has now been removed. And it's been removed because we are putting in more demand in the market than there is supply at that area, which we created. And now that we're putting in more demand in the market, this is the area where we are interested in buying again. We consolidated price right here. That's probably a Friday candle, because then we have a gap up, and we typically don't see gaps in the market. The only time we see gaps in the market is over the weekend. So Friday they closed price inside supply, and then Sunday price gapped up because the institutions were already starting to come to the market with buying. But because there wasn't any sell orders until higher, they had to fill those sell orders at higher prices, so it gaps up. And then as they're consolidating price there, they make sure to remove that distal line just by a hair. That's it. And then they retrace it to that area of buying, and then away she goes. Like that. Pretty amazing stuff, Jesse, isn't it?
It is. It is very interesting.
Right? Like once you know this, could you ever go back to trading? What methodologies were you using before, just out of curiosity?
It was the indicators, but I knew they were lagging, so I was still looking.
Yeah.
To find something right.
Yeah.
I tried price action, but it wasn't like this at all. There was no defined area where to put the supply and demand, and
yeah, exactly.
It didn't make any sense.
Mm-hmm.
Yeah, agree.
No sense
I've looked
at all. Yeah.
Look, I've looked at a lot of things, because when I was coming to realize all this stuff about supply and demand, I said to myself, wow, this is it. This is like the real deal. And this is the real deal because when you see it happen over and over again, the same type of scenarios, the same thing, taking out supply zones by just millimeters on the chart and then retracing down, I said, okay, I want to see if there's any other methodologies that have something very substantial in them that I can incorporate into this supply and demand methodology just to enhance it. And I looked at a lot of stuff, And there wasn't one thing I saw in any other methodology that I felt would enhance what we do here. Not one thing. Not one thing. When I saw what other people were doing, I said, you know, I want nothing to do with that. That just seems to be so random,
Yeah,
you know,
exactly.
and so random. Like, you know, we have a chart and we know why it's doing what it's doing. We know why price is getting in right here, okay? But like if you remove all those drawings and you have that, you know, when you look at, you give the same chart to another trader and they're like drawing this and they're drawing, you know, I see where they start their trend line sometimes and it just doesn't make any sense what they're doing. And then
Yeah,
it's
I know
like,
two of those gurus put the line in the same locations.
yeah, you know, and then they're drawing channels
Mhm.
and then they're drawing channel. It's just, to me, it's so random. Their trend lines, you know, sometimes they don't even have higher highs when they draw a trend line. It's just, they just start a trend line for the sake of starting a trend line. To me, I can't see any rhyme or reason for it. So, you know, so there's no, how do you know what's going to happen? It's,
Mhm.
I can't comprehend. I can't comprehend. It's like a blind person driving. I would not want to sit next to a blind person driving a car in a downtown
Yeah.
city. I'm sorry. I may love the guy, but I don't want to put my life at risk with that. And that's what it seems to me. So I didn't see anything in any methodology that I could apply to this to enhance it. It's just not worth it from what I've seen. So good work, Jesse. Really good. Keep it up.
Thank you.
Keep it up. Yeah, my point that I was going to say is, once you know this, is there any way that you could revert back to any of those old methodologies and feel secure with what you're doing? Is it even possible to do that?
Mhm.
Nope.
Not at all, unless you lose your mind.
No, right? Sorry?
Unless you lose your mind.
Yeah, it's like once you have a triple grade A steak, you know, once you have a filet mignon, you know, the first time you try a filet mignon, and then you go and you get like a regular steak at your regular grocery store, you know, that's been injected with antibiotics. The cows were eating corn, genetically modified corn. You
Mm.
barbecue that and you're chewing it. You cut a slice and you're chewing it and chewing it and chewing it and chewing it, and it just doesn't want to melt in your mouth like that filet, right? It
Nope.
just doesn't want to melt. And you're like, no, this is good. This is good. I like this. This is good stuff. Just, sweetie, pass me some of that barbecue sauce. Let me just dip a little bit of this into some barbecue sauce. Give me some of that butter. Let me just soak this thing in some butter. Hold on. Let me go get the hammer from the garage. I'll just hammer it a little bit more and tenderize it. It'll be good.
Yeah.
It's good. You could pretend all you want, but it's not what the other stuff is, you know?
Yeah.
But you got to pay for it, right? A filet mignon costs money. When I look at the price of a filet mignon, it's like I want to have a heart attack.
Mm-hmm.
Okay? But every once in a while, it's nice to treat yourself, right? You don't look at the price and you say, hey, I'm going to treat myself. And then you barbecue that thing, you cut a slice, you put in your mouth, and you're chewing on it, and it's melting in your mouth like butter, and you're like, oh my gosh, how am I supposed to do anything else?
Yeah. Kev,
But
you
it
mentioned,
comes at a cost.
you
Sorry?
mentioned even, you mentioned trend lines, right?
Mm-hmm.
Simple as trend lines. I was so happy to see the way how you actually had a method that made sense to draw trend lines, because before I joined the school, I was
Mm-hmm.
searching to see how people were really supposed to draw a trend line.
Yeah.
And nobody had a method that made sense, that was consistent.
Right.
And now that I'm in school, you can actually see that how to actually validate a trend line. And
Yeah.
I have seen that all the trend lines that we have drawn made so
Mm-hmm.
much sense,
Yeah.
So
Yeah.
even something simple, people
Yeah.
might think that's simple, but it's not something simple, because I think that plays a big role in what we do.
Big role. Big role. Yeah. And as you're speaking, I'm looking at something and I'm seeing something make sense to me right now.
Yeah.
Okay.
Yeah.
Yeah. Like that. That makes sense to me.
Yeah.
Because price came, it held down, and then the explosive move. So yeah, there's a zone there as well.
Yeah.
So that's it, guys. Yeah,
Right.
that makes sense. Perfect sense. Yeah, the trend line, because, well, the problem is that when people are drawing trend lines, they're not stopping to ask themselves what's the purpose of drawing a trend line and really examining that and really delving into the logic behind the trend line. Now, I know people draw it and they're like, well, if I draw this trend line here, then I know every time price hits that, it's like bouncing down from it. So that acts as support or acts as resistance. Okay, but like, why is it acting as support or resistance? Why? You know, those are great. You know, if you draw a horizontal line, it's great if price is going to be ranging, but are you going to sell short when price hits that line again? What's the logic what's the logic behind why it's going to drop again? So you see, there's such a lack of logic and critical thinking in trading from retail traders, and this is what allows them to constantly lose. You know,
Yeah.
because when you don't think critically and think logically, then you're not going to come to any understandings. Figuring out this trend line, how to draw it, how I came to the conclusions that I came to was all because of critical thinking and thinking logically. Why does the trend line have to exist? Who's looking at that trend line? Why does it have to be like that? So I used principles and concepts that I knew to be true when it came to supply and demand, basing momentum candles away. What does it mean when it closes away? I applied all that knowledge and I incorporated it into drawing a trend line. So, and we know that our trend lines are correct. Why? Because the market says so. Not because I say so. The market says so. That's why. And if it doesn't look right, then it's not right. The market is saying it's not right, like here. So let's say we had a trend line here. Like that. Let's make this larger. Let's say we had a trend line like this. Okay, it looks decent. Why? Because these areas are holding price down, then we get the explosive move. Okay, great. But because of concepts that we teach in level 2, we couldn't draw it like this. Okay, and those in level 2 can look at this chart and know what I'm talking about.
Yeah.
And then we have this area and then this bottom wick and stuff. You'd have to change the logic of what you know to be true about certain candle formations. You'd have to change that into something that is not logical. Okay, you'd have to look at those candles and conveniently say, no, this candle here in the middle, even though it's a little bit longer and it's got a dot in it, I'm going to consider that to be a momentum candle. So if you just say that and leave it at that, and you don't go into examine that and validate that argument, then you're gonna be misinterpreting those candles, and you're gonna be applying the wrong logic to those 3 candles. And you can't do that. You can't logically try to change the definition of what that middle candle looks like and what it means in that context to suit whatever you want it to suit. You know, your mind will say, hey man, there's a trend line there. Why? Because I see this big move here and I want to make sure I capture every single supply and demand. But in the process of that, you're going to have to ignore that wick. You're going to have to label that candle in the middle as being a momentum candle. You're going to have to break through what you know to be true by examining charts and having that knowledge validated by the market. When you start doing stuff like that, you start destroying your analysis, and you start redefining what certain candles mean in certain contexts. And when you start doing that, you're going to screw up your knowledge base. So you can't do that. Instead, what you do is you say to yourself, hey, this looks like there should be a trend line here. Why? Because I see how this responds and there was an explosive move here. Okay, but it can't be. Why? Because of a couple things that are happening here. So therefore, it can't be a trend line. Okay, but let's just say maybe we don't take into consideration that big wick. Let's say we do that. How about that? Should that be? Well, I don't think so either. Why? Because we typically don't see all these type of candles doing this before a break of a trend line. We typically don't see. And then you ask yourself, what do we typically see price doing when it is creating this many candles? Well, from my experience, when I see many candles like that, what's typically taking place is that price is responding from a bigger area of demand on a higher time frame. So then you go and investigate it, and guess what you find? A higher time frame demand, which explains why these candles look like this, which invalidates this trend line. Okay, so when you take it upon yourself to investigate, the amount of knowledge that you get is tremendous. And you may say, oh, big deal, whether it's a trend line or not. Maybe there's demand, maybe there's not. If you don't take the time to investigate, you have no idea how much information you're missing out on. Because your brain might say, I'll take his word for it. I don't need to investigate it and see it for myself. I'll just take his word for it, because we've decided that this is not a trend line. So what do I need to investigate if I already know the answer, right? Imagine Sherlock. He goes to the crime scene and he could investigate things and see it with his own eyes, but somebody comes out and says, no, don't worry. We found the culprit. It's this guy right here. He was outside. There's a little bit of blood on his hand, and he had the gun in his hand. You know, if you read Sherlock Holmes mystery novels, you'll see that there's been many situations where people come in and say, hey, we found it, don't worry, and all the evidence points to that guy. But does he take their word for it? Or does he say, no, sounds too easy, and I need to investigate even deeper? You know, a lazy person would say, oh, okay, good, well, that solves that. I'll go back to my place and I'll go for a dip in the pool and not have to worry about this. No, but a person who realizes the value in investigating and spending time, you know, it just explodes the amount of knowledge that you get. Because if you look into it on this chart and you locate that higher time frame area demand down here, now you're going to say, oh, okay, yeah, I see what Kevin's saying. It's exactly what he said, because he's seen this many times, so he knows. But your mind is going to record it. Your mind is going to record that, so that next time this happens on a chart, guess what's going to happen? You're going to recognize it. If you don't investigate, you have 50-50 chance of you not recognizing it. If you investigate once, twice, 3 times, 4 times, 5 times, 6 times, next time you see that, your mind will automatically know it's responding from higher time frame area of demand. If you take my word for it, you'll miss it. So it depends on you. Do you want to get this quickly? Do you want to understand the market under 1 year or 2 years or 3 years to a certain level? It's up to you. You spend the time, then you'll learn. You don't spend the time, then you don't learn.